Tesla stock dropped 6.12% in one single day despite 2 price target updates. This is just too exciting. There's so much good news. We'll go through everything. And later I will also explain why Tesla stock is down so much today. It is certainly not because of the markets. Goldman Sachs increased the Tesla stock price target from $200 to $225. TD Cowen increased the Tesla stock price target from $140 to $170. And Deutsche Bank reiterated the $250 price target. And this right here is perhaps my favorite piece of news today. Oh, you will love this. These are global battery electric vehicle deliveries from BYD as well as Tesla. BYD's battery electric vehicle sales shrunk while Tesla's increased. Today, I saw a lot of people talking about competition, and sure, competition is coming for BYD. BYD is affected by the competition. But competition for Tesla? Yeah, I'm not that sure about that. No wonder BYD reduced production of some of their battery electric vehicles. Here are a few more comments from other analysts. Gary Black posted this. Citi Analyst says there were no major surprises in Tesla's overall delivery number. However, segment mix was lighter with S and X missing consensus. That's right. Given the stock's run up to the Q1 delivery report, expect a slight to modest pullback, they said, on what will likely be regarded as an inline outcome with softer mix and lingering inventory build concerns. And this one is just a little bit hilarious. Look at TD Cowen. They just increased their price target, but look at what we're saying. Tesla again said that excess production was due to more vehicles in transit, and then weakness in Model S and X was also attributed to cars being in transit. They are not saying anything positive, and yet they increased the price target. When we have supposedly bad news and analysts are increasing price targets, you know, we have a good stock here. And Jeffrey says that the debate about price elasticity versus general demand weakness will persist as production keeps outpacing deliveries, which is what Tony was talking today on TV. If you didn't see the last video, I suggest you go watch it. And here's a pretty interesting way to look at this. You look at the compounded annual growth rate from 2014 or 2016 or 2018 or 2020, and specifically from Q1, and you will see that the growth rates are staggering. Keep in mind though, he did every other year, so there's no 2015 or 17 or 2021. 2021 compared to this year would be lower. And this is important to keep in context as well. Q1 seasonality impacts even high growth EV brands. ICE data will look even worse, says Forward Cap. Just a reminder for people taking Q1 versus Q4 sequential growth out of context when analyzing the auto industry. And check all of these out. BYD, of course, we know is down. NIO is down. XPeng is down. Rivian is down a little bit, but Li Auto is up 13.5%, and you would think, oh, this is horrible. But keep in mind that Li Auto's vehicles, which are all SUVs, they all come with a fuel tank to charge a battery and extend driving range. So not pure battery electric vehicles there. And then look at XPeng. Ooh, down 47% from the same period a year ago. That is bad. No wonder Cathie Wood has been reducing these other positions, and she's still keeping Tesla, although she reduced her Tesla to be within the 10% of her portfolio, as she is a fund manager. Although she did not have to do it. She cannot buy more once the stock goes above 10%, but she doesn't have to sell it. So I think that will turn out to be a mistake long term. And this is great news. Giga Berlin will reportedly soon expand to a permanent fourth production line shift to increase production output. Tesla wants to let 500,000 cars roll off the production line per year, about 10,000 per week. And here is the original article translated from German with Google Translate if you would like to take a look. And of course, it would be very logical to assume that Tesla indeed is having a huge demand issue because, they are expanding their production. So yeah, that somehow makes sense to a lot of bears. Roland has a new beautiful chart, production, and then deliveries in red. And this right here is inventory as percentage of production. As you can see right now, compared to before, we are actually looking pretty good. This, I believe, is one reason why Tesla stock is down today substantially. A lot of analysts, because they think short term and they invest with basically a 1-year horizon, and they can trade out of these positions at any time. They care about this stuff a lot, and they saw inventory increase. If inventory decreased, I think they would have been quite happier, and then the stock would not have dropped as much. And look, if you trade short term, of course you want to pay attention to inventory levels. But if you are a long-term investor, I don't see any issues here, because we are worried about the next generation vehicle and full self-driving, as well as energy storage. I shared this with all of you guys earlier today, but here's the thing. If you look at industrial grade lithium, it's actually quite a bit lower. It is now at 195,000 yuan versus 230 yuan for lithium carbonate. And earlier, these producers agreed to set the floor at 250,000. That's not going very well for them. Bradford thinks that one of the reasons why Tesla stock is down today so much is because short-term traders bought Tesla stock on Friday and they were going to sell today anyway, and that made the stock drop a little bit. I don't think that's all of it, but one reason, sure. I think another big reason why Tesla stock dropped today is because the retail Tesla stock investors were expecting certainly a higher number. Although Wall Street, not really. Ross Gerber was expecting as many as 500,000 deliveries, and clearly I think he is quite disappointed currently. Leo Cogman, the all-in Tesla stock billionaire investor, was expecting 450,000. So if some of them started selling some, clearly that will have some impact on Tesla stock as well. But I think that increasing inventories is what worries more people a little bit more than that. I mean, look at how disappointed Ross Gerber is. Tesla shareholders will have to accept the new paradigm soon. Lots of new challenges the company faces now that it has matured. Many issues are finally catching up to them. There's legitimate competition and it is real. Now, James, on the other hand, is asking where is that competition. He cannot see any. But like I went over with you today earlier, yeah, all of them are down. BYD is down substantially with their global EV deliveries. And then another big reason why I think Tesla stock is down today is because of the Model S and X deliveries. They produced 19,500, but they delivered just a little bit over half of the produced Model S's and X's to customers. I don't think these two models are important to Tesla's future, but some analysts think that it is important for Tesla right now because all they see is right now. But these two models really are only competing with the Model 3 and why there's no other real competition. Tesla has released Cyberworld, which is basically a lockbox to store your charger. And the video is actually pretty good. I can't play the music because I will get a copyright strike. Yeah, Tesla is getting really good at making these videos. So if they make a video this good for a product that basically does not matter at all, if they start advertising and they actually make good commercials and videos for the cars, then, you know, there will be a lot more sales. I mean, look at this production value, and when you play the music, it's just so much better also. This product is only for the Chinese market, and actually, it's not bad because for $800, you get the whole thing, including installation and the charger. You get everything. So actually, I like that. And this is just the mobile charger, so you can take it with you. Maybe, I guess, in China, people are worried that if you just leave it there outside, let's say, someone else is going to park next to your charger and then charge their car. Or maybe they are afraid that people are going to steal it. Well, now it's going to be locked away inside this box, so you would have no fear like that. And Electric actually praises the product too. I think it's pretty good value for $800. A reminder to everyone that Tesla does not need to grow 50% year over year to achieve 20 million deliveries in 2030. Tesla just needs to grow at 40.55%. And this is a really good chart. The EV supply chain in a nutshell. As you can see, lithium refining, cobalt sulfate refining, battery cells, battery anode, battery electrolyte, battery separator, all of these things come from or are refined in China mostly. This is why it does make sense for the US to have that $7,500 EV tax credit, because the US wants the supply chain to move away from China. We do not need that EV credit to transition to sustainable energy. But if US wants to diversify its supply chain and have a supply chain in the US, that makes a whole lot of sense. Look how little is done in the US. US is in this color. This is almost nothing. This is literally zero. This is literally zero. This is just a little bit. This is zero, zero, just a little bit, and just a little bit. There are also more new markets that the Model S and X will be shipped to. One of them is South Korea and another one is Taiwan. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.